Let's talk about retail Forex. The fact that you can trade on a relatively low deposit, you can use margin, you can deposit. How can people make consistent returns in foreign exchange?
It's the same as anything, really. I mean, consistency is key to being successful in trading. It is consistency. And consistency really boils down to, well, first of all, it's discipline. It's having a trading plan. It's studying the markets, looking at the technicals and the fundamentals, and then going from there. And the discipline also has to come from money management and risk management, which are two related but slightly different things. So, I mean, this is really sort of what it all boils down to, and sort of if you are trying and working towards being a profitable trader. And you know, one of the big things is really trying to accept the fact that you won't be right all the time. Every time you trade, what you're doing is effectively testing an idea that you have had. You know, you've decided that sterling's going to strengthen against the euro for whatever reason that might be. Then you go in, you choose, you might put a limit in and decide, well, you know, that's a good level of support. You know, if the market doesn't go below that, then I think it's got a good chance that sterling's got a good chance of going up against the euro, or expressing it the other way, that you know, sterling is you're going to sort of like sell the euro, buy sterling, and there you're testing that idea in the market proper. But you've got to remember that you must have those risks. You might be wrong, and so it's important to sort of consider sort of where, if you are wrong, where you want to cut the position, how much you're willing to risk on that, and so at what level would you decide, well, you know, that's enough, I was wrong on that, I'll cut my position, I'll come back and have a look at it another time.
And why is it so difficult to trade the financial markets successfully and make money?
I personally think because you know, we're human beings and emotion takes over, and it's very difficult. You know, when money's involved, it's very difficult to sort of take that out of it. So I think that's one of the biggest, perhaps the biggest obstacle, really, to being successful. It's dealing with those times when things are going wrong, and they do go wrong. You know, there's always going to be a time when they go wrong. So I come back to the fact that, you know, you want to sort of have your risk capital, accept that it's risk capital, that it's money that you could lose. And then you want to manage that very carefully. And what I mean by that is, you know, you're not sort of putting all of it, let alone half of it, or even a quarter of it. You know, perhaps only sort of 10%, and some people even say 2% of your risk capital should only be risked on a single trade. Now that's a sort of a rule of thumb. It works for some people, but it depends on the size of the pot you've got in the first place. So it's not going to work for everybody. But that aside, whatever way you decide to divide up your risk capital, you know, you've got to sort of look very carefully at, if this trade goes wrong, what's my downside? Always start off with, not with how much could I win out of this, but how much could I lose? If it goes wrong, bearing in mind my stops, bearing in mind fundamental stuff which I can't predict, obviously, but so let's try and factor some of that in. What happens if I go wrong, if it goes wrong? Can I live with that?